Ever wondered what swap derivatives are? Well, imagine a world where two parties can exchange financial liabilities or cash flows, tailoring the terms of their agreement to best suit their individual needs. That's the world of swap derivatives. Swap derivatives, in essence, are customizable contracts that allow for the exchange of financial responsibilities or cash flows between two parties. They're built on underlying assets such as commodities, equities, interest rates, and currencies, and are primarily traded over the counter between financial institutions or businesses. The beauty of swap derivatives lies in their flexibility. The terms of the swap are negotiated and customized to the needs of both parties. But of course, with flexibility comes risk. One party may default on the payment, leading to a default risk. So, while swap derivatives offer a world of possibilities, they also require a keen sense of risk management. Now, let's delve a little deeper into the world of swap derivatives, starting with interest rate swaps. These are contracts where two parties agree to swap cash flows dependent on a notional principal amount. It typically involves swapping a fixed interest rate for a floating interest rate. These swaps are used as a hedge against interest rate risks or for speculating and profiting. Then, there are commodity swaps. These contracts allow two parties to exchange floating cash flows based on a commodity spot price for fixed cash flows, or the predetermined price of a commodity. It's important to note that this doesn't involve the actual exchange of the commodity. Instead, it's used as a hedge against commodity price fluctuations. So, to summarize, swap derivatives are customizable contracts that enable the exchange of liabilities or cash flows. They're based on a variety of underlying assets and are primarily traded over the counter. The two main types of swaps are interest rate swaps and commodity swaps, both of which are used as a hedge against risk. But, as with all financial instruments, they come with their own set of risks and require careful management. Swap derivatives may seem complex, but once understood, they offer a wealth of opportunities. Whether it's hedging against risk or speculating for profit, swap derivatives provide a flexible and customizable tool in the world of finance.